All right, folks, let's talk about financial assets. Don't worry, it's not as boring as it sounds. Think of it like this. You know those dreams where you find a treasure chest overflowing with gold? Financial assets are kind of like that, except instead of a dusty old chest, it's more like a magical spreadsheet. And instead of pirate gold, it's potential wealth. Now, unlike your comfy couch or that questionable velvet painting you inherited, you can't actually touch a financial asset. They're not physical objects. They're more like promises, agreements that hold value and represent your claim to future cash or other goodies. So picture this. You buy a stock in a company that makes those delicious, addictive cheese puffs you can't stop shoving in your face. That stock is a financial asset. It represents your tiny ownership in the company. And if the company does well, meaning they sell a boatload of cheese puffs, your stock becomes more valuable. Cha-ching! Let's start with the most straightforward financial asset of them all, cash. Yes, that's right. The crumpled bills in your wallet and the digital digits in your bank account, that's pure, unadulterated financial power. Cash is the OG financial asset, the one that started it all. It's the lifeblood of any economy, flowing from person to person, business to business, like a beautiful, chaotic river of commerce. Now you might be thinking, cash, that's boring. I want to hear about fancy investments and get-rich-quick schemes. But hold your horses, my friend. Cash might not be the flashiest financial asset, but it's undeniably essential. It's what you use to buy groceries, pay rent, and bribe your friends not to post embarrassing photos of you online. Next up, we've got stocks. Stocks are like little pieces of ownership in a company. Think of it this way. You buy a stock in a company that makes those ridiculously comfy slippers you live in. You're now a part owner of that slipper empire. Now, owning a stock is kind of like having a magical beanstalk. If the company does well, your beanstalk grows taller and taller and your investment becomes more valuable. But if the company stumbles, maybe they start making those scratchy, uncomfortable slippers that nobody wants, your beanstalk might wither and your investment could lose value. But hey, high risk, high reward, right? That's the stock market for you. It's a wild ride full of ups and downs, but it can also be incredibly lucrative if you play your cards right. And maybe get some insider tips from a talking gecko, but that's a story for another time. Section 4, bonds, like lending money to a friend, but with interest, of course. Now, let's talk bonds. Bonds are a little different from stocks. Imagine loaning your friend some money, but instead of just hoping they'll pay you back someday, good luck with that. They give you a legally binding IOU with a specific interest rate and maturity date. That, my friends, is essentially what a bond is. You see, when you buy a bond, you're essentially lending money to a government or corporation. They promise to pay you back the principal, the amount you loaned, plus interest over a set period. It's like being a mini bank, except instead of wearing a stuffy suit and carrying a briefcase full of cash, you can manage your bond portfolio from your couch while wearing pajamas. Bonds are generally considered less risky than stocks, but they also offer lower potential returns. It's the classic trade-off. Play it safe and earn a modest return, or take a gamble and potentially strike it rich, or lose your shirt, but hey, no risk, no reward, right? Section 5, why should you care about this financial stuff? You might be thinking, John, this is all well and good, but why should I care about financial assets? I'm perfectly content living paycheck to paycheck and spending my hard-earned money on instant ramen and questionable online impulse purchases. And hey, I get it. Managing your finances can seem about as appealing as a root canal. But here's the thing. Understanding financial assets and investing wisely is crucial for building a secure future for yourself. Think about it. Do you want to be working until you're 90, or would you rather retire early, travel the world, and finally write that best-selling novel you've been dreaming about? Investing in financial assets can help you achieve those goals. It's about putting your money to work for you so you can eventually kick back, relax, and enjoy the fruits of your labor. Section 6. Ready to dive into the world of financial assets? So there you have it, folks. Financial assets, they're not as intimidating as they sound. They're simply tools that can help you build wealth, achieve your financial goals, and live a more secure and fulfilling life. Now, I'm not saying you need to become a Wall Street whiz kid overnight, but take some time to educate yourself about the different types of financial assets, assess your risk tolerance, and start investing wisely. Your future self will thank you for it. And remember, if you ever feel overwhelmed by the world of finance, just take a deep breath, grab a cheese puff, or 10, and remember, it's all just monopoly money in the grand scheme of things, except, with real-life consequences. But hey, let's not dwell on the negative, shall we?